Fellow traders, 'tis I, the Rumpled One, coming to you on Wednesday, November the 26th. The year's 2025. Let's talk trading. Protect your money. These videos are for educational purposes only. Your results may differ from mine. One way you can protect your money is by having risk management in place always. That way you don't lose more than you're willing to lose. But that's really not what today's topic is about. What I mean by protect your money is there are so many people out there trying to sell you something, and a lot of them are really good at sales. They know how to push your buttons. You see, in sales, what they want you to do is identify that you have a certain problem. Yeah, I've got that problem. Then they're going to offer you the solution. And then they'll have it so you'll wind up feeling like you really should get their solution because that's probably the only solution. And if you don't, then if you don't get their solution, then you're stupid. So, and the reason I'm bringing this up is I got something in my email the other day, and it's like 90% of traders fail. And we've all heard that for years, right? And it says it's not because they lack intelligence and it's not because they can't read charts. Because, we're smart and we know how to read charts. It's because they're gambling, not trading. Now, the thing is, I've talked about trading versus gambling many, many, many times because there's a big crossover in the similarities and there are some differences. But the funny thing is, it's not the fact that they're gambling. It's not the reason that they're losing. The reason that they're losing is they don't have money management. The best gamblers, the poker players, the dice players, they all have money management. Even the guys that bet on horse races, they all have money management and risk management. They don't allow one event to knock them out of the game. And it's just that simple. And then they talk about things like, you don't have a clear plan or you get emotional. Um, and that is true. But the thing is, it's not because you're gambling. It's something totally different. And they talk about having, entry points and risk management, which, of course, that's good. I talk about that every video, risk management, and having exit strategies. And they say that's the difference. Well, yeah, there's some truth to that. But you know what? For only $1,997, which is 50% off, you can, get into their academy. That's the gold package. But the platinum package, hey, that's 2,497, and there's only 50 packages available. You see, scarcity. That's one of the things. Oh, I better hurry up and buy this before it runs out. I mean, you ever get those? You probably get those emails like I do, and they'll say like only 17 left, act now or whatever. And then you come back the next day, only 23 left, act now. I mean, it's just so funny. So traders, when you get these emails, you can read them for entertainment purposes only, or you can just chuck them. Because, the funny thing is out on the internet, there's so much free information. Not all of it's good, but I think if you read through enough of it, you can sort the wheat from the chaff. And I'm pretty sure there's a few people out there that sort me out, but that's okay. It doesn't hurt my feelings. But I just find these things very, very entertaining. And of course, you want the platinum package. Why settle for gold when just for $500 more you can get platinum? These things just crack me up. But they are successful. I mean, all I have to do is hook a couple people, and I mean, at 50 packages times $2,000, do the math. But anyway, let's go ahead and take a look here. Go through the charts real quick. See, we're 100 pips below the monthly open, 12 off the high, 216 off the low. So it looks like we're expanding that monthly range to the upside. All the weekly gaps have filled now. Notice we've broken below the past 3 weeks highs. We broke out of the opening range for the month. So any opening range traders, you were rewarded. And look at this, the monthly crossover. If anybody, picked up that monthly crossover to the north, you're up 100 pips right now. It's funny because, at least it's funny to me, is that, I've been doing this for so many years, and these horizontal lines, they haven't changed, meaning the levels may have changed, but the previous month's high is the previous month's high, and you know opening level of the opening for the month is going to be the opening for the month all month. And you can just trade these horizontal lines. You don't need anything fancy. You don't need any higher math. And you don't even need squiggly lines. Even though, yes, I have been doing some squiggly lines. But I use them as a bias, not as a trigger. And it's something that indicator two was something I wrote. God, I think it was way back in 2008 or something. And it's still performing well today. Meaning the signals are still valid. And if you follow it, you can make some money. See, we're 718 pips above that yearly open now, so we're moving back up. Yesterday, we moved out of that inside bar from 3 days ago. But yesterday, it was 2 days ago. But you can see prices definitely taken off, but we're still below the weekly inside bar, and we're above the monthly inside bar. That was 22 months ago. We had a monthly inside bar. So out of curiosity, we won't have one this month. And we had some red news today. I was in dreamland when the news came out, so I didn't get a chance to trade it. But it looks like the new beast is leading the pack with 273 pips of range. And the pound is at 114 pips, so actually it's ahead of the yen. And the euro New Zealand is coming in second at 256. Interesting, the New Zealand USD is only at 86. I wonder why the New Zealand USD is lacking against the other pairs are really taking off. Buy zone, you can see here, you had one short signal. Anybody got burned on that one, but then in that same candle could have reversed and made money here. And the next time, looks like same thing happened. It actually it opened above, so that wasn't a signal, but to the short side, and then another short and another long. So trading the daily open buy zone, once again, could have been profitable for you. And I know these horizontal line trades probably are the most boring trades out there. Red rats, get ready to feast. You see your red rats, actually looks like the green rats probably feasted first. And then the red rats had a couple of nibbles here. Actually not a bad move, over 20 pips, almost 40 pips to the downside here. Let's see. Open 19, closed 92. So that would have been 19 and 8. No, not closed, but low. Closed 82. So that was 30 pips. Right? Yep. 30 pips. Bambino Flex Indicator said to go long. Pivot trading plan. Near the pivot was long. You can see here we came down to the pivot once, and then in the last H4 candle, you see it cross below, actually hit that monthly open, crossed, and then crossed right back above it. We're getting close to the monthly pivot. We took out the weekly and we took out the daily. Let's see, we got a daily pivot from 20 days ago. I'm wondering how many, if we'll take that one out. As you can see here, in and out of the upper wick zone to the downside and to the upside. Notice this is dropping. Now we're below 70. I think that might be the first time this year we've been below 70. And we're in the upper ATR zone. So once again, you might want to start looking for shorts. Let's put this on M30. You can see here we've had some nice, over the past, 6 hours, some nice trading ranges on the M30. You can see we had an inside bar break to the high. And here, here's a telltale, 2 inside bars in a row. And then we had a break to the high there, broke out a couple times. We had an outside bar on M30. You can see here we broke to the downside, we broke to the upside. So those inside outside bars, once again, horizontal lines, simple trade. Now somebody might say, hey, am I supposed to trade all those horizontal lines? Only if you want to. But you have to be smart too. It's like just trading, the simple sweet spots every 5 pips. When price goes one way and starts going the other way, well, then right here, it's already crossed one line, then okay, well, it crossed 2. So, and if you get that, it's like, but after it crosses 3, do you still want to go? It's like, the trade was back here, probably at the 25 psychological. But you just don't want to push it, because you can almost think of these like, steps on a ladder. It goes up, 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 and then it comes back down. And so you can just look here from history. You can see here, hey, it came back in, so it was in this zone. So it has to either go here or here. Once it hits this line, then it's either going to go to the next line to the upside, or the next line to the